Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. How do you find trades that match your style? Not every trade suits everyone. Two otherwise similar people in background, education, work practice may be attracted to very different trades or somewhat different trades. Usually, it is not easy to find two people who take exactly similar trades all the time. That is why even if I or another trader share their trade ideas, other traders may not take the same trade. They may even know that the sharing trader has a respectable success rate, still they may not take the trade. That is true for me too. I know traders who have a high success rate. Some of them share their analysis publicly. I do not always take their trades. I take some of those, probably only those that match my style. Style can be different things. It can be a choice of instrument, stock, options, naked options or not, futures, forex, covered call, short put, etc. It can be the type of stock like growth or value, or as in Q techniques, both. It can be only stocks in a stage 2 uptrend. It can be stocks breaking out to an all-time high. It can be stocks starting to move from a bottom. It can be in the strongest industries or the most accelerating industries, or as in Q techniques, both, etc. What is my style? I usually do not use leveraged instruments, that is no naked option, no futures or forex. Other than that, I am comfortable trading different styles. It did not start like that. Over time, I learned to benefit from many of them. Q allows you to find those trades, whatever your style, in minutes using 100% live systems. When you take trades that match your style, you feel more comfortable taking and then following through the trades with discipline, and that increases profit. I'll try to find different styles of trades today using live analysis. Greetings, I'm Sagar Nandi, swing trading stocks using only one trading system, Q, that I developed myself. Here is my email ID and different forums, websites where I share my trading ideas and market analysis. Disclaimer, this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them today. Q charts instruments that often move the market. Dollar index. Weekly candle is very bearish in color and shape. Daily is in a downtrend with trendline resistance, no nearby support. Fell sharply. Friday's candle shape is indecisive, though color is bearish. It is probably too late to short if I was trading this instrument, but it is clearly bearish. And jump thrust low is showing it is reaching a level from where a recovery is likely. That recovery has not started yet, it is still bearish. I study dollar because it often tends to inversely correlate with the market, but that did not happen this week. Sometimes it does not work, that inverse correlation. This week the market fell overall for the week and the dollar index also fell. Dollar index and markets correlation may not work sometimes, but mega cap index and markets correlation always work. That is another instrument I study regularly. In the weekly, after the bearish headwind came, mega cap custom index fell sharply for 3 weeks in a row. Very unique reversal signal, and that is why I pay attention to that. This week's candle shape is somewhat indecisive because of the long lower tail. Color is bearish. The long lower tail is created by Friday's candle, which also has a long lower tail. It has a bullish indecision at the bottom that says price may go up next week, though there is no buy setup. And earlier mega caps for long time used to outperform the market. Now it is underperforming. If the mega caps recover from here, that will certainly help the market, but again there is no buy setup at present. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. Broadest view of the market, total view. Firstly, we see from the percentage of stocks above 50-day moving average that it is still in a downtrend. Even when price came here, using this study, I mentioned repeatedly that this recovery was a recovery in a downtrend, and then the downtrend resumed. Downtrend is continuing as far as market breadth is concerned. The Hindenburg came recently, and after that market fell. Hindenburg is acting somewhat weirdly because typically Hindenburg tends to come at the top. But here the Hindenburg didn't come at the top, came after market fell already somewhat. Later on we'll see the Hindenburgs came from NYSE or Nasdaq. Other than that, what is noteworthy are the bingo baby out with bath water, that is panic selling, that came repeatedly last week. Looking at the panic selling and Friday's small recovery, it is possible that the market will recover next week. May not go to new all-time high, but a recovery is likely, and there are other indications of that also. What style of trades to take now? Where is the higher probability side? If we look at growth versus value, growth is continuing to underperform. Value is doing better and small cap is underperforming. So large cap value may be some stocks that one may be interested in. Of course, there may be other trades also in growth stocks, for example, or stocks that are both high growth as well as value at the same time. I'll try to find some trades like that today. Growth not doing well, not even on Friday, is something to note of. Even though a recovery is likely, at present it doesn't show that the recovery may happen from growth stocks. That may change next week. If next week the growth stocks, especially small cap growth stocks, start to outperform and some other signals come, that will be a golden time to start buying. If we look at the total view using weekly daily. At a glance, weekly color is bearish, though the shape is indecisive because of the long lower tail. Stopped somewhat below the trend line support, but if it goes up little bit, it will create a false downside breakout that will be bullish. In the daily, it stopped right at the white direction line with a bullish shape candle, neutral color on Friday, and more importantly displayed that unique headwind reversal signal, possible reversal signal, and price is already at jump thrust low, an unsustainable low price level, plus it had a bull release also. Price went up with high volume on Friday. All these are indicating a possible recovery next week, enough to take some profitable long swing trades, and more importantly or equally importantly, those trades will have narrow stop loss. I like to buy those times when the stop loss is narrow, and that time is now as far as total view at a glance is concerned. From total view, if we drill down to Nasdaq and NYSE, the Hindenburg, which became confirmed, came in NYSE, where the Hindenburg is traditionally calculated, and the baby thrown out with bathwater bingo signals, thanks to Mr. Ian Woodward, may him rest in peace, who invented this signal, is telling that again panic selling was going on repeatedly last week. Now it may be time for a recovery. There are other possible recovery signals. One of them is the 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated that in my trading, and I follow that quite well, quite profitably. Both for Nasdaq and NYSE, 3-month new high low is at an extremely oversold position from which a recovery is likely. Works like a clockwork, and only if you start using it you will realize that, just like I did. That's why now I follow it regularly. That is one reason I am buying or thinking of buying now. I have bought some stocks. I'm not thinking of shorting right now. If we look at the major indexes and look at 3-month new, okay, before looking at 3-month new high low for Russell 2000, even the percentage of stocks above 50-day moving average is at extreme oversold position. A recovery is likely. Russell 2000 is the weakest pocket, small caps is the weakest pocket now, and that is extremely oversold from this indicator. Plus, if we look at 3-month new high low, again works like a clockwork for Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 500, S&P 1500. Whether you look at broader indexes like composites or somewhat broader, quite broad, 500, 1500 indexes, or Russell 2000, or the smaller indexes, Dow Jones Industrials, everything is so extremely oversold that a recovery is very likely, enough to take some short-term bullish trades and book profit. External view then, this is how most people around the globe see the market. This is a picture from last week. I shared it in the last market recap. That time, weekly was mostly bearish except Dow Jones Industrials, which was the strongest, but Friday, 1 week ago, turned bullish. This pattern in fact repeated this week. Looking at this pattern last week, I was bullish. I shared only one buying idea in the last market recap. We'll review later how it played out. But what I saw in the market ETFs 1 week ago showing very similar pattern this week here. Now all the market ETFs are down by very large percentage for the weekly period. DIA is continuing to be the stronger one, relatively speaking, continued from last week, and again, though the weekly period is bearish, Friday had a respectable rally, not a big rally by any means. None of the market ETFs went up by 1% or more. But looking at the weekly drop, it felt good to have the rally on Friday. We saw the total view went up from support. That is nice to have when we have Friday's rally. And we'll see if other market ETFs or other instruments of significance are also at support. SPY broke below the trend line supports, multiple of them, but ended with a long lower tail. Shape is indecisive. If it goes up little bit, it will create a false downside breakout, which is bullish. The long lower tail came from Friday's move, which also had a bull release signal, and in daily it has already created a false downside breakout at the double bottom or watermark support. That is bullish. Friday's candle shape is bullish. Color is neutral. If I look at the SPY chart, that allows buying, and the total view chart also allowed buying, did not allow short, too late to short. SPY allows buying. What about the other market ETFs? QQQ underperforming the market because of the mega caps coming down. Mega caps were underperforming last week. That made QQQ underperforming the market. Weekly color is bearish, shape is indecisive with long lower tail, and interestingly stopped right at the tough nuts to crack trendline support. That support and the price stopping at the white direction line says that the next likely move may be upward, and on top of that again it has a bull release signal and a bullish headwind. The unique possible reversal signal. Shape is bullish at support with headwind and bull release with weekly trendline support. The next likely move is up, allows buying, does not allow shorting. DIA, last week I showed it was the strongest of the market ETFs. That continued this week. It is outperforming the market. Though the color is bearish, shape is indecisive because of the lower tail, stopped at trendline support, tough nuts to crack. Trendline support is there in daily as well, and here also we have the unique possible reversal signal, twin signal, bullish and bullish shape. More likely move, next move is upward. The headwind is a unique signal. If it comes in one instrument, I take note. If it comes in multiple related instruments at the same time, like these market ETFs I am seeing now, or if it comes in multiple stocks in same industry at the same time, that carries more significance. If it comes, that is, together in similar instruments, or if it comes together in weekly, daily, both, that also has more significance. Interestingly, the bullish headwind, in fact a pair of them, is coming at the level where bullish headwind had come earlier from where price went up. That and the trendline supports all are pointing to the next possible move to be upward. Allows buying, does not allow shorting. And now the weakest of the market ETFs, IWM. Of course, it is underperforming the market. Weekly color is bearish, shape is somewhat indecisive because of the lower tail, and it stopped again at the tough nuts to crack trendline support in weekly. Daily is at jump thrust low, an unsustainable low price, and at that level we have bullish indecision cluster. One is noteworthy cluster here, three of them is to be taken more seriously. Friday's candle is indecisive. It is not as supportive of taking bullish trades at the as the other market ETFs or total view, but this does not allow shorting for sure because it is at unsustainable low price at jump thrust low. So far we have not seen anything that supports shorting. Let's continue with the market level bucket analysis, pinpoints reversal points with remarkable accuracy. Again, thanks to Dr. Jeffrey Scott, I implemented in Q, made it real time, and I will once again show the value of the real time analytics right now. This is a tweet I shared on Tuesday, 4th March at around 10 a.m. Eastern Standard Time. So market hours, morning session. Market was very bearish at that time. 80 to 90% of the sectors, stocks, industries were all down. However, I noted, and that is the value of the real-time bucket analysis. In real time, I could see that more than 40% stocks were already below lower Bollinger Band. Bollinger Band is supposed to capture the price 90% of the time. When 40% of stocks in S&P 1500 goes below that, that is unsustainable. And also from the other angle, how many percentage of stocks more went below lower Bollinger Band in one day? It was much more than 10%. From 17.6, it jumped to 41.7 in the morning session itself. Both of those characteristics were telling that a recovery was likely, and I tweeted it in real time. Why don't I also show the tweet? It is sometimes good to look back. If you are following me, you are already aware of the tweet probably, but no harm looking at that. Helps to build confidence. This is what I tweeted in the morning session, 4th of March, and this is what I showed in the presentation. Very bearish market as of that time, but bucket analysis was telling that a recovery was likely. Notice the percentage of stocks below lower Bollinger Band at that time, 41.7 on 4th March. Let's go back to the presentation. 41% of stocks below lower Bollinger Band, 4th March, Tuesday. How is it now? Only 7.9%. From 41.7 it came down to 7.9. A lot of stocks recovered from below lower Bollinger Band. Were they giving trend following trades? No, and that is where the style comes in. I'm quite comfortable taking reversal trades, which can be bounce trade at trend line support. It could be a headwind trade, it could be a box trade, and I am always comfortable taking any of those trades when the market analysis tells me that the likely trades are going to be from there. That is from where I find the higher probability styles. So I started buying, and because a lot of stocks recovered, they gave me some profit. The market is still in a downtrend because 66% of stocks are below mid Bollinger Band. And again, that is a question of style. If I am only looking for trend following trades, I may find some today also. But when a market is at extreme low, jump thrust low, I showed that in the last market recap from QFinder, that we'll find today also whether QFinder still shows extreme low price for many stocks. We may not find many trend following trades when all these characteristics are there in the market. If my style is only to take trend following trades, I am handicapping myself, but I am comfortable taking reversal trades, so I could make money or try to make money in any market condition. Friday sector industry stock breadth is bullish. What is more valuable is to see the sector industry stock breadth over multiple periods. It shows where the market came from, where it is now, where it may go next, and that is telling that the longer term 1 month period is bearish, 10-day longer term bearish, This week is also bearish. That is in sync with bucket analysis, where majority of stocks are still below mid-Bollinger Band, but today and one-day periods turned bullish. The bearishness is reducing, bullishness is increasing, though it is still in a downtrend, but that increase in bullishness supports buying, does not allow shorting. Technical breadth, weekly period overall is still bearish. Again, that is in sync with other market level analytics. Strength and continuation are also bearish, but reversals are more bullish. Again, if my style is only to take trend following trades, I may not find so many. I may find reversal trades more in this market. Friday we had a rally in the market, and I showed that the market ETFs did not go up so much, but market ETFs don't tell the full story. They are heavily weighted by mega cap stocks, heavily influenced. If I look at the Q Finder daily technical bread, that is more representative of where the trades are, and it is clearly on the bullish side. For all the categories it is very bullish, but it is not overbought because majority of bullish trades are from mid price level. And jump thrust low is still continuing. This I showed in the last market recap also. Price is at extreme low level for many stocks, and that low level is unsustainable. They're likely to go up, and the likelihood of going up is further emphasized by the bullish headwind alert. As I mentioned, headwind in one stock is noteworthy. It may even give a reversal trade setup, but this headwind alert in aggregate is telling that it is better to look for buying opportunities. Again, a matter of style, buying in stocks at a lower price level. And green candle low is another analytics that is telling the same thing. Look for buys, and they may be lucrative buying opportunities at a lower price level. Market level summary: the most important trading decision is whether and where to buy or short, or whether to stand aside. This week's summary: the market fell for the week. It was oversold. Many key analysis projected an imminent recovery. Bucket analysis did that. 3-month new high low for composites and all major indexes. IWM percentage of stocks above 50 MF. Jump thrust low alert in Q Finder. All of them are showing at present that a recovery is likely. Friday the market rallied somewhat. However, I also note that a similar pattern played out last week, but this week the market fell. Therefore, it is to be seen if this Friday's move continues next week. Last week it did not. Still, for now, it allows only buying, doesn't allow shorting. If we have accumulation count, accumulation count or Eureka, thanks to Mr. Ian Woodward again, may him rest in peace, shows up next week, it will give more confidence in buying. And on top of that, I mentioned that already, if growth stocks, especially small cap growth, starts to outperform next week with Eureka, with accumulation count, that probably will be a golden opportunity to buy. And during the weekend on Saturday, Dr. Jeffrey Scott, friend of mine and a great trader, I learned from him. Many of his concepts are incorporated in my system. He conducted a marathon training session with so many analysis, many of them. I don't have that depth of analysis, like sentiments and how the market rates are moving, how the inflation may play out. He also projected that a recovery is likely. Nothing is guaranteed. If you have not watched his video, you may watch it. It is available in the Google group Top Down Trading. You may search Google Groups and watch that excellent video there, 3 hours long, but worth it, worth every minute of it. Review of last week's trade ideas. I shared only one trading idea, BLK. BlackRock. Interestingly, after I shared it, the news came out that they took majority control of the ports along the Panama Canal that the new US administration wanted to control. I shared the idea before that. The market fell. Let's look at BlackRock, how it played out. I shared the bullish idea in BlackRock based on this candle, and if I look at the historical trend lines, that time it gave a breakout long setup at a lower price level, and fundamentals industries were aligned with that. So I shared the idea, I bought the stock. Okay, let's move to the stop level. Stop would be below the protection signal, below the recent swing low, which would be at this level. And you can see if the stop was as a GTC order, it would be hit on Tuesday and again on Friday. But if the stop was on a closing basis, the stop would not be hit. Which one is better? None of them is better. It depends on what you like to use, how much risk you are taking in the trade, and your market view. Knowing from analysis multiple angles that the market was extremely oversold and it is even now extremely oversold, I might not want to put a GTC order because a whipsaw like that on Tuesday, Friday was likely at a market bottom. So you might not put the stop as a GTC order when you are buying a stock at a lower price level in a market that is very much oversold. It may whipsaw and then go up again. But if you stopped out, that is fine. I in fact stopped out. On Tuesday, I did not put GTC. I saw that it recovered. I was happy. But on Friday, when it was going down again, I thought to myself that I'm going to exit it at the worst possible time, probably. But I did take a small loss and exit from the trade. That was BlackRock. In fact, if I look at the daily now, it has a bullish indecision cluster, 4 candles in a row, 4 daily candles stopped right at the white direction line, has a very long lower tail. Probably I exited at the worst possible time. That is fine. Not trying to make profit in every trade. I closed the trade with a small loss. This week's trade ideas. I'm going to share trades of different styles. As I mentioned, I'm comfortable taking all of them. The important thing is whatever be your style, you are able to find those trades using real-time analytics. So if I go to industry score in Q Edge, if your style is to buy only in the strongest industries, with one click you can find them. If you are looking for turnaround industries, that is the industries with strongest acceleration, with one click you can find them. Industries that were weak earlier and now turning around with acceleration. If you are looking for high growth stocks, with a single click you can find them from the fundamental scorecard. And if you are into box stocks, again thanks to Mr. Ian Woodward, special category of high growth stock, with another single click you could find those also. On the other hand, if you are into value stocks, with a single click you can find the undervalued stocks. If you are into high dividend yield stocks, you can find them easily as well. If you are only interested, usually not probably, but nice to have, stocks with short squeeze potential, if that is your style, you can find them. if you are looking for stocks where insiders are buying, Tesla is one incidentally, you could look at them. And recently you saw I traded several stocks on the bearish side where insiders were selling and I made some profit. You could do that well. That is the fundamental scorecard style. And in terms of technicals, using Q Finder, because my preferred trading direction is bullish, let's look at the bullish side. We could look at only stocks at low price level. Some people like to do that, buy at lower price level. If you are interested only buying stocks at a higher price level, maybe breaking out here from a high price level, that is a style. You could do that easily, or you could buy in mid price level. Some people may like to buy stocks bouncing from support lower price level. Some people may take reversal trades. Some people may like breakouts. Some people may like only trend following pullback or flow trades. Whatever be your style, you can easily find them. Now I am going to share some buying ideas from all these different angles. Let's start with a stock and I'm going to show their fundamental scorecard, industry scorecard and also technicals to explain the different characteristics. First one in my list that I want to share is CCK. All these trades you could find in real time just before the market closed, and if you wanted to buy them you could. I bought some of them, and one I actually shared on Twitter on Friday. I of course bought that, but let's start with this one, CCK. Style wise it is a high growth stock. It has improving earnings and revenue growth. Let's look at its industry score. Industry is strong. It is already strong for a while. Metal, glass and plastics container. It's not a turnaround industry right now, but strong industry is also a trading style buying into that. And in terms of trade setup, CCK, by the way, okay, CCK, let's look at its technicals. What is the trend? It is uptrending. It is above both yellow and white direction lines, has has higher low, higher high. Uptrending stock just now broke out. So this is a stock that people, trend following traders may like to take. Also came out of a squeeze. Some people like that pattern. Again, a matter of trading style. Next stock, let's start with scorecard again. By the way, for CCK, see the percentage of stocks up on Friday, peer stocks, 100%. That's what I mentioned, that though the market ETFs went up by less than 1%, that does not tell the full story. 100%, when 100% industry peers go up on a day, that is somewhere to look to buy. So CCK is one buying candidate, trend following, growth stock, strong industry. Next is CRUS. Usually I share only one or two trading ideas. This week, to explain the different styles, I am going to share 6 of them. Cirrus, Cirrus Logic, semiconductor stock. This is not growth stock, it is value stock. Some like to buy stocks where funds are accumulating. This is one such stock. Its industry, Semiconductors were probably coming down. Let's find out. Yes, it was coming down. So it is now one of the most accelerating as well as one of the strongest. Not either or, it is both. So it's a turnaround as well as one of the strongest right now. Certainly an industry I'd like to buy. About technicals, CRUS. This is also trend following. It is above both yellow and white direction lines, higher low, higher high. It does not have a breakout setup. Instead, it has a flow trend following long setup. Again, Vital retrieved all the data. 86% of PR stocks went up. Market ETF's move did not tell the full story because mega caps did not do as well as some of these industries and stocks. Next candidate today, different style. This one is box stock, thanks to Mr. Ian Woodward. May him rest in peace. It is also, I guess, in the semiconductor industry. Let's find out. PI. Yes, semiconductor industry. Very high growth stock, and box one, the best, in some way you can say, is the best box to trade in. And box stocks are best traded, gives best result when market is at a low price and starts to go up. That's why I mentioned if a Eureka comes now, stocks like PI would be great buying candidates. And as you know, the best growth stocks start to go up before the market starts to go up. So PI is something to keep an eye on. It has a short squeeze potential. Of course, we saw 86% of PI stocks went up, and we saw the industry already. No harm looking at it again. It's the same semiconductors industry, so it will be a turnaround industry. We saw that already, as well as one of the strongest. How is the trade setup in PI technicals? This is at unsustainably low price level, jump thrust low, price extreme low, and then came for 2 days in recent days, big move up 3. Almost always this leads to an up move. Very lucrative buying pattern at a low price level. And some traders like to buy lucrative buying opportunities. It's a box stock, nothing to ignore. At jump thrust low, price extreme low with big move up 3, nothing to ignore. Has a bullish flow signal, not flow setup. Flow setup is for trend following trades. This is not uptrending, but it has a breakout trade setup with narrow stop loss. Good enough for me probably. And I like that attractive pattern of jump thrust low, price extreme low, big move up 3. I certainly like box one stock. 3 more to go. SWKS seems also in semiconductor industry. And when you see multiple buying opportunities coming, different styles probably in terms of trade setup, but in same industry, multiple stocks, we take it more seriously. This is also semiconductors, but this is undervalued stock, has high earnings quality, has a short squeeze potential. Insiders are buying. Again, I shorted several stocks recently with insiders selling when the market was falling, made a nice profit. This one insider is buying. Semiconductor industry was weak. Here earning growth is not good, but it is improving. Revenue growth is also improving, and I always keep an eye on the fact if the company is making profit or not. It is a profitable company, though the earnings growth is currently negative, it is improving and profitable company. Pays a respectable dividend. not very high, but 3.86, worth noting that. Same industry, of course, so I'm not going to go to the industry score again. It is a turnaround industry. How is SWKS technicals? SWKS. Again, it is at a very low price level, but it has that attractive pattern of jump thrust low, price extreme low. Once again, came 2 days in recent days, big move up 3. Somebody stepped in at the lowest price level, started buying, had a huge breakout on Friday, went up by 8.5%. Weekly turned bullish. Very oversold situation. Somebody stepped in and bought a lot. Huge move up on Friday. This move did not show up in the individual market ETFs because the mega caps did not do so well. But this is a turnaround industry. Insiders are buying. Undervalued stock, profitable company. Something you may look at. Two more to go. Different styles I tried to mix up today. You may or may not trade all styles, but whatever be your style, you can find those trades using Q in real time, 100% real time. WNS, value stock, funds are accumulating. Let's look at its industry. I think this is an uptrending stock. Data processing industry. This is one of the strongest industries, not a turnaround case, but I can buy either turnaround or strong industry or both. So this is strong industry. 76% of peer stocks went up on Friday. Look at its technicals, WNS. In terms of style, it is uptrending above both white and yellow direction lines. Has a very nice breakout setup on Friday. Weekly allows buying. That was trend following, and the last stock is what I shared in the Twitter on Friday. I think so. Let's find out. Yes, APLE. APLE is a stock I shared on Friday. Let's look at it using live systems. Start with Finder again. It has many positives as well, but different styles for different people. Undervalued stock, high earnings quality, very nice dividend yield of 6.5%. Insiders are buying. A rate stock. That means when high dividend yield rate stock, in terms of instrument choice, it could be traded using stocks, it could be traded using covered call as well. So dividend yield plus covered call will almost ensure a respectable annual return if you are able to sell longer term options. Even 40 days to 2 months options, you would get a nice premium because market was at a lower price level. Again, 90% of peer stocks went up. That is a strong industry. Okay, I should have come back there. I'll go back there 1 minute. The industry is turned around, one of the strongest. Earlier it was weaker, and if I go back to the stock scorecard, it is actually both undervalued as well as high growth plus a high dividend yield. That is why you can see why I tweeted about this stock and not the others. Interestingly, it has in fact 4 attractive characteristics in terms of fundamentals: high dividend yield, undervalued, high earnings growth, improving revenue growth, plus insiders are buying. A nice stock for buying the stock itself, or it could be traded using covered call as well. Technicals, this is APLE. Downtrending stock but stopped right at watermark support in daily. It is giving a possible box setup, and also the unique reversal signal headwind is there. It is also giving a possible bounce setup. Weekly has excellent support. So I showed different styles of trades. It could be using different instruments, stocks or covered call. I showed stocks in uptrend or downtrend, reversal trades, bounce trades, breakout trades. I showed growth stocks or value stocks or both, stocks in strong or accelerating industry or both. Which trades you take depends on your style. I guess over time, like me, as you follow other traders, as you see them making, seems to like that they are making nice money, nice profit, respectable profit I should say, using growth stocks, you may start trading growth stocks. You see somebody else making respectable profit trading value stocks or high dividend yield stocks, you start them after some time. You may initially start with only trend following trades, then you see, well, such bounce trades or price extreme low, jump thrust low, big move up 3 trades are also giving nice profit. You start to add them one by one into your trading arsenal and you become more versatile. The benefit is that whatever be the market condition, whether it is strongly uptrending or just starting to move up from stage 1 to stage 2 uptrend, you are able to find trades in all market conditions, and Q allows you to do that. That is how I trade in every market condition. Thanks a lot for joining. I look forward to seeing you in my next market recap. Have a great weekend, and as I always say, as I'm quite confident this live session, so there is no reason not to do that. Trade profitably. Thank you.